Okay guys, going back to Ask Scruff, and let's have a look at the Trader Clinic. So we'll flick this back over. Right, we're up to FX George, so a little salute to you, my kid. Right, when trading level to level based on the bias, you have a possible trade. If the price is inside the golden zone, 38 to 61, are you going to wait for a price to retrace below the zone if you're looking to buy the trade, or to get higher outside the zone, sell the trade? So as you have enough room pip-wise to enter. Okay. It really comes down to personal choice. But if I'm going to sell it, you are correct. I want the higher it gets, the better. That is a form of price following. But the zone itself is a target area. There's 3 points of attraction within it. It's the outer edge, the middle, and the lower edge. Now, you can be lucky and you can actually have a fib that runs straight through the middle of it. And there's two versions of the fib. There's the confirmation fibs that help you with your targets in the first place, or help your levels in the first place, rather. But then there is the trigger fibs from an hourly that can help you with your target. Now, they can also be used as entry exits. Now, we see this all the time when I'm doing a markup, and I call it an entry exit. They're the blue ones. So if you've got a blue one that's in it, you want to kind of place your order in and around that blue, because that's where the price point is. The higher it gets up for a sell, the better. But what you want to be doing is seeing how much space there is to the next key level. And the next key level will be a confirmation fib, and certainly a solid support and resistance. You see them coming into your chart, you need enough space for your trade between the entry and the exit, and take into account your spread as well. Okay, we'll do more of this in the live streams, and I'll talk more about it in the Q&As, but that's a broad stroke of the way that zone works. Catch you soon.